The Churchill Capital 4 merger with Lucid Motors might just be the most talked about SPAC merger in 2021. Recent filing by CCIV is causing a lot of consternation among investors ahead of the crucial merger approval vote, currently scheduled for the 22nd of July. What will happen, and what factors should investors keep in mind? Welcome to NewVehicleMedia, your go-to channel for all EV-related news. Subscribing is 100% free, and likes help YouTube to suggest similar videos to you. In this video, we will dive in SEC filing, what it means for investors, and how it may impact stock levels. It will have some critical CCIV news and updates, so make sure to stay. Your comments are loved by us, and we'd love to read them. Make sure to share your thoughts. The SEC filing fuss. A few weeks back, on June 25th to be exact, CCIV filed a so-called 424B3 form with the SEC. The filing describes a few proposals which require shareholders to vote, which is currently set for July 22nd. It includes the crucial proposal to approve the business combination agreement with Lucid Motors that we have all been raving about. This itself is nothing new, but the proposal to increase CCIV authorized share capital is raising questions amongst many investors. The second proposal is requesting an increase in CCIV's numbers of shares from 501 million to 50.01 billion. What is interesting to notice is that the same action is also part of the proposal number 3A, with the caveat that proposal number 3, dubbed the governance proposal, is advisory in nature and not mandatory for the consummation of the business combination agreement with Lucid Motors. This means that even if investors reject the proposal number 3, the increase in CCIV's authorized share capital is embedded within the charter proposal, meaning the increase has to be certified by investors if the merger with Lucid Motors moves forward. The given reasoning, as quoted in the filing, the amendment is intended to enhance Churchill's governance best practices, as annual elections enhance the accountability of directors to stockholders, as such elections provide stockholders with the opportunity to register their views on the entire board at each annual meeting. This brings us to the heart of the problem. Churchill Capital 4 has to issue new shares to existing Lucid Motors investors. In addition, the PIPE investors, who are bringing in $2.5 billion in crucial liquidity, also need to be issued new shares to the tune of $166.66 million. Assuming no redemptions, 1.595 billion Lucid Group common shares will have to be issued in total upon the close of the merger agreement. Nonetheless, the authorized share capital is nearly 10 times its immediate insurance requirement, thereby giving rise to fears of rampant dilution. To some, this may sound as negative news, but let's keep in mind that raising the authorized share capital should not be taken bearish immediately. It all depends on how Lucid will be using their facility in the future. They are simply utilizing the authorized share capital to its fullest, rather than going to investors for the issuance multiple times. CCIV seems to be catering to all of its foreseeable equity financing needs in one go. To put things in perspective, it seems very unlikely that the facility will be utilized to its fullest. Peter Rawlinson has mentioned Lucid's expansion plans multiple times. This channel has several videos identifying this growth. These ambitious expansion plans would need to continue to raise capital. All capital raised towards empowering the production capacity, such as supporting the growth of their factory or financing the vertical integration, will only benefit the company's revenues, which will, in return, benefit investors in the long run. Based on the new capital raising, the Lucid Group is not expected to become profitable until 2025/2026. Production. The internet is full with analyst reports that are comparing the valuation of Lucid to other EV manufacturers such as Tesla and General Motors. Some go over the expected sales numbers provided by Lucid, others go over the valuations and market capitalizations. As you may have noticed in our comment section, some are bullish, some are bearish. The capital raised by the merger will be used to start production, followed by the first products to be delivered, which is scheduled within the next 6 months. Other EV startups, such as Lordstown Motors, have proven that setting up a successful electric vehicle production is a complex exercise. Several competitors are outsourcing this process, while Lucid is going to make the vehicles themselves. The capital seems not to be an issue. The demand has been proven with 10,000+ reservations. The success now lies in the hands of Lucid's leadership team, which consists of a high-level team with expertise in all fields needed to bring this upcoming production to a positive outcome. In a previous video, we went over the possibilities for a post-merger dip and compared the SPAC merger to other ones that have taken place in the past. CCIV has seen its height at approximately $65 earlier this year. Since then, it has found support in the high 10s, around $18/$19, and has been slowly rising since towards the low/mid 20s, bouncing around at $25/$26. There is a high chance it will experience a run-up towards the transaction when more Wall Street investors are stepping in. Conclusion: we're not expecting the new ticker will break the all-time high of $65, but based on history events, a little run towards the completion of the merger would not be a surprise. We would guess that the prices will go up shortly after the merger, but believe that the company's assets and innovations are worth holding for a longer term. The potential of EVs is there, and vehicle deliveries will result in customer experience, which will eventually determine Lucid's position within the EV market. We are currently a supporter of Lucid Motors and believe investing in this company is a long-term play. Investors who are in it for the short term should look at the bigger picture. As all stock, LCID will surely see some dilution due to spectators, but when adopting and visualizing its long-term potential, LCID could just be the right investment for you. Most of our viewers are investors in Lucid Motors, and we're curious to know their opinions. We have seen $45 as a new value coming by multiple times. Where do you think it will go? Patrick is not convinced Lucid will sell the promised amount of cars by 2026. Do you think Lucid will reach their set targets? Let us know your thoughts in the comments. Here's another quick reminder to subscribe if not done so already. Likes help to boost the algorithm, which will let YouTube suggest similar videos to you. Thanks for watching.